markets correspondent. Overlooked stock, George, but not one for us in this business. A lot of Vimeo links going around in the TV world, but I didn't realize they were publicly traded.
Likewise, OJ. So it's a first for me as well. I thought they were part of a larger, maybe group or consortium. And in fact, this was a company spun off by IAC, a few years back. So it's been now publicly traded on its own for quite some time. But essentially, for what it is, it's essentially an all-in-one video software solutions suite of web tools. And so essentially you can do video hosting, but also create and collaborate and edit your videos and share them on their web hosting and service platform. And so, for what it's worth, they do compete with some of the larger players out there. But the larger players, which include, of course, YouTube from a streaming standpoint, but at the same time, they do compete with Adobe in the content publishing as well as content editing software space. And the value proposition of Vimeo is it's combined. In other words, it's sort of a self-serve platform where you can do the hosting, the streaming, but also the content development and editing as well, which again can be very time-consuming for content creators. But it is a subscription as a service-based business, and for what it's worth, they also have been growing their top-line sales, and their profits have now been profitable as a whole in the last 2 years, whereas they were losing money 2 years ago, but in fact now they're actually making money. So if you look at this last year, the stock is higher by about 95%, and there's also some catalyst. You see Piper Sandler actually placed Vimeo on their conviction small cap list, and they have a price target of $10 from $7. And if you overall look at their earnings profile, it is improving. Top line sales are about $420 million. Market cap is still very small, around $1.1 billion, and they have generated, at least in the last year, about $33 million in net income. So, they have been growing their business. They have been increasing their profit margins, but they also have been spending, especially what they consider what's called their Magisto, which is their AI software tools and technology for editing. They have been comprehensive as a video platform, but I think the challenge still lies in their platform is the stickiness of it. You have to create a product that's sticky, and competition out there is still relatively robust. Apple, by the way, I think this will be interesting what happens with Adobe's earnings this week, because Apple's made tremendous amounts of headway and of course, for free editing software that actually competes with Adobe's Premiere software that's very expensive on a monthly recurring basis.
That's a pretty big deal to be able to compete in that market, though. That's pretty good. I think also as far as being able, I do think they have a Premiere sort of version of a type of a video too that is convenient for sending, for sharing, for privatizing as well. It's easier to do that than send somebody a file or load something up onto YouTube and make it private. So there's definitely some good use cases to it, more than I realized, actually. Stock valuation, though, is it getting nuts, George, or real quick to come back to that point? Because you said they're making profit gains, right? So that should be helping the valuation.
Yeah. They have, but the thing is, if you look at the price action, it started moving in July. Then, of course, last earnings, it also gapped back to the upside. And then recently, based on this upgrade, another gap. So it's gapping higher over time. And one would say maybe just looking at the balance sheet, they have $324 million in cash on $1.16 billion in equity. So it's quite a bit of cash. I don't see dilution risk because they're actually not issuing many shares. They have plenty of cash to operate their business. They are operating profitably. But then you have to consider, what's expected forward. 18 cents for 2025, 16 cents for 2026. So there's a little bit of a dip expected in earnings right now based on the number of analysts that are covering it. Places it around 38 times next year's and 45 times the following year's earnings profile.
Okay. That seems like it's improving for sure, right? So moving in the right direction.
Yes.
But at the same time, 40 times like earnings. Not the worst. I mean, there's crazier stuff out there right now for sure, but they're going to have to continue to pump up the growth. All right, thanks, George. Nice. Appreciate that. Good luck. 4.5% pop in Vimeo.